This morning, I typed in ticker symbol DRAM in my Fidelity app, and I was met with this message. Security is subject to a sponsor fee. At the time, the share price was $70.26 for the Roundhill Memory ETF. It continued to come down throughout the day, down about 4%, highly due to some AI semiconductor weakness. This is an ETF that I know will have higher volatility than my VCI or VOO. But when I was met with this message, this warning that I've never seen before, I took a second. I called up Fidelity to have a discussion with them and have a full understanding. I had looked into this briefly a few weeks ago when I heard that fees were going to be associated with some ETFs at Fidelity, but the current funds that I was holding at that time, like SPMO and SMH, were not affected. This change came into place on June 1st, and now it applies to 100 ETFs, including over 40 Roundhill funds. So if you're someone who buys one share at a time, fractional shares, everything changed. As of June 1, Fidelity has expanded its service fee from 27 ETFs to over 120. They told the ETF companies, pay the platform fee or investors will have to pay a 5% trading fee, and that is going to max out at $100. And Roundhill, the company behind the fund that I was taking a look at, DRAM, did not pay the fee. So now we pay for it every time we want to trade these type of funds. But like I said, big ETFs like VCI, VOO, QQQM, SCHD, and many others were unaffected. But these niche, newer ETFs like DRAM and AIO are impacted. So Roundhill was impacted the most, but Dan Ives and other firms were also affected. So this fund, ticker symbol DRAM, holds the big three memory companies, Samsung, SK, Hynix, as well as Micron. These companies make the memory chips that AI systems need. So as AI needs more memory chips, this ETF benefits. So I did not invest. Today would have been a good day though with this little drop, which brung the fund closer in range to the 200 EMA. But I was planning on taking it slow, maybe buying one share, putting in some limit orders, and coming up with a plan to dollar cost average with small amounts. But during my conversation with Fidelity, they asked me about how many shares was I planning to buy to get an idea of the size of my investment. So I said 25 shares. But I wasn't planning on jumping in all at once. Based on the share price at the time that I called, 25 shares would have been about $1,800, causing me to be hit with an $86 fee. My decision was made even before I found this article that flat out says, if you're buying shares of these ETFs, especially in smaller amounts, you should look somewhere else. The article goes on to say, with Fidelity's size and scale, it should realize that this is bad PR. What are they going to gain from this? Charging us these fees, causing this aggravation for those interested in these funds, most likely, from our point of view, outweighs the financial benefit. And in my example, the fund that I was taking a look at already has an expense ratio of 0.65%. So definitely one I wouldn't want any extra fees associated with. And that $100 cap on trades is per ETF. So if there was other positions that I wanted to build into for the long term, I'd have to pay fees on them also. But overall, I'm glad that I discovered this on a fund that would have been a new addition to my portfolio, not one that I'm currently building up like SMH and SPMO. So I have the flexibility. I have other brokerage accounts. I just wanted this one in one of my long-term Fidelity accounts. That was the place where I felt was the best fit for me. But because of these fees, I'll be making a choice, making a plan to perhaps put it in my account over at MooMoo. Here's a look at some other funds that are going to be impacted by these fees. And something like this is always going to be an issue for someone like me who loves to dollar cost average in order to build up their positions. So, were you aware of this going on at Fidelity? Have you run into this issue with anything that you were already building into when it comes to your Fidelity portfolios? Let me know down in the comments. I've been a huge fan of Fidelity. This is the first speed bump or wall that I run into with my investing strategy over there. They have lots of commission-free investment choices and no high limits associated with the accounts that I've opened in the past. So I hope they can come up with a deal with some of these brokerage companies or find a better way to recover those fees instead of passing them on to us, the retail investors. Those fees are way too high and they're going to lose some business because someone like me that wants a small position, that plans on building it over time, would have to move this over to another broker. Just a quick update today. Thanks for watching. Okay, bye.